Business owners can be very unorganized. So if you are the bookkeeper, you have to know how to record transactions when the owner co-mingles business and personal funds. This means paying business expenses from personal accounts. If you have any questions about this topic, you can leave them in the comments section below and I'll do my best to help you. And of course, if you feel the video helped you, I hope you will click like and don't forget to subscribe to get updates on new videos that come out all the time. Very often owners pay non-business expenses from the business bank account. Now, we already did this on May 19th in a previous video when we took company money for Vonda's son's dentist with check number 903 that we paid from the company bank account. And no matter what the money is for or whom it's going to, if it's not for business, and I mean this business, the one that you're keeping records of in QuickBooks Online, then the account that records this transaction is owner's withdrawals. So we use the write a checks window just like we saw in a previous video and put the withdrawals account at the bottom of the screen, right there in the category field. And then once we put that there, we fill out the rest of the check normally, and that's how we write a check to anything except for something that relates to this business, the one that we're keeping records of. Now, what happens when we pay a non-business expense from a business account? Well, the cash that we took out of the business obviously decreases, and we have more owner's withdrawals if we're paying non-business from a business account. So then if we do the opposite, if we pay a business expense from a non-business account, then we have the opposite of withdrawals. We have owner's capital. And whatever expense or service the business used would increase the amount we would record for that expense. So let's clarify this and explain why both of these increase when a business owner pays a business expense from a personal bank account. Well, personal funds are used for the business. That's the same idea as giving money to the business to help pay business expenses. Therefore, owner's capital increases. The business still incurred an expense for the service that the business used. The business then has another expense that the owner's personal funds paid for. And it does not matter where the owner's money came from. It doesn't matter if the owner's money came from a personal credit card or a personal bank account or under the owner's mattress or from the owner's Aunt Tilly. It doesn't matter. If a business expense is paid from any account or funds outside the business, the account that records this transaction is owner's capital. For example, let's imagine on May 22nd, we paid UPS $100 for a delivery today. The owner paid cash from the owner's personal pocket, not company petty cash or company bank cash on hand or company bank account. The owner's personal pocket paid a business delivery for Vonda's business. The company itself has delivery expense, because the delivery service was for the company, not for Vonda the individual or her family. Basically, it means Vonda invested another $100 into the business. So, there are two ways to enter this type of transaction, either from a journal entry or from the QuickBooks Online register window. Now, I'm going to show you what the journal entry would look like. But if you've been following the course along, you probably already know what to do. And I'm not going to save it because I would like to also show it to you how you could record it in the owner's capital register window. It would be the same result as recording it as a journal entry, but if you record it as a transfer, it may be easier to track with the other personal funds. So, we're talking about May 22nd, $100, delivery today, paid in cash from the owner's pocket. Let's go ahead and record it. To make this new transaction, we click New, go over to Journal Entry, and we already learned how to make journal entries, and you probably already figured out in this transaction what would be debit and what would be credit. Well, we know that the expense that we used is debit because we always debit an expense when we have that expense. And in this case, it was delivery expense. And the delivery was from UPS. So we can put the name of the vendor or customer here, and that helps us keep track of it, and that'll be helpful later. Now, the amount of delivery expense was $100. Now we know that if one account is debit, the other account is credit, and that would be Vonda's Capital or Vonda's Capital Investment, and it's under the category of equity. And QuickBooks knows that would be $100 credit. And we remember capital is on the credit side, and we will credit it to make it increase. So this is what the journal entry would look like. Except for you would have to put it as 2017. But I'm not going to save this. This is what we could do, but instead I'm going to close this without saving it. I was just trying to show you what it would look like because I think you should also have the option of being able to record this in the Owner's Capital Register window. So we would go to Vonda's Capital in the chart of accounts, like we learned, accounting, chart of accounts, scroll down to Vonda's Capital, and then we would click the register. Now here in the register, it already shows the prior transactions that we had. And we could either add it as a journal entry, which is the same exact thing we did a minute ago, except fitting it into these fields this way instead of the way it looked in the other window, or a transfer. Notice the fields really didn't change. We are still limited to what we're physically able to put in. Let me just move it over a tiny bit. Now, let's leave it as a transfer because you can see the results would be the same. I just want to clarify that if you're in the owner's equity window, the only difference between recording it as a transfer and recording it as a journal entry, if you choose journal entry, you have the option of putting any other account you want in the chart of accounts as the other account that goes with the Vonda's Capital in this transaction. You can choose any other account from the list. However, if you record it as a transfer, you are more limited to the accounts that you can choose from when you do this. So we have no choice but to record it as a journal entry because the account that's going up is delivery expense. And delivery expense will not show up here if we use add transfer. We would have to leave it as a journal entry, and the payee is UPS. And the account we know is delivery expense, which is somewhere in the chart of accounts. Delivery expense. There it is. And of course, now here's the question. Which register are we in? We're in the capital register. So in the capital register, is capital increasing or decreasing if Vonda pays a business expense from personal? The answer is capital is increasing. You will almost never use the decrease column if it's the capital account. Increase by $100. What does that mean? It means delivery expense will also increase. And don't forget to put the correct date, in this case, which is May 22nd, and click Save. Now we can look at the trial balance, And we can see Vaughn's capital increased. If we double click and take a look, we can see we have another journal entry from May 22nd, increasing it by $100. And if we look at delivery expense in the trial balance, you can go down to delivery expense. Well, that increased by this $100 journal entry that we just made on May 22nd.